Hello, and welcome to Explain the Charts. Today is February 27th, 2025, and we're taking a close look at the SPY, the S&P 500 ETF. We're going to analyze both the current news and the chart data to give you a comprehensive view of what's happening. Recent news indicates that stock futures are ticking higher after NVDA's earnings, but concerns remain about President Trump's trade policies. Tariff threats against Canada, Mexico, and the EU are creating market uncertainty, as well as a potential economic development deal with Russia. Also, consumer confidence is declining amid inflation expectations. We'll look at how these events might correlate with what we see on the charts. Now, let's move to the daily chart. We can see a general uptrend over the past few months, but also some notable pullbacks. Looking back to October 2023, we see the price bouncing between 410 and 430. The S&P 500 has added just 1.3% so far this year, according to recent reports. Let's see if the charts show us more. Zooming in, we can see the SPY reaching new highs in early 2024, climbing above 480, then 500, then 520, and later 550. We see a peak around March 2024 near 520, followed by a significant dip to around 500 in April. The index then recovered, reaching new highs again. Around the end of April, early May there was a sharp rise that was short-lived. Most recently, we are nearing 600. Zooming in on a different range, we can see some support around 520 that occurred in November 2024. We can see the effects of investors' concerns of Trump's trade policies and the recent decline in consumer confidence. As some news has reported, traders think the stock market looks frothy and overvalued, so they're likely sensitive to consumer data. As of today, February 27, 2025, we are seeing some slight pullback after pushing new highs. Let's switch to the 1-hour chart for a closer look at the recent price action. On the 1-hour chart, we can see some volatility today, February 27, 2025. We had a high of 596.83, then declining to 593.66. We see a support level forming around 593.66 and another recent high of 597. Looking at the 15-minute chart, we can see even more detail of the trading patterns today. We see a steady decline from a high of 596, then some consolidation. NRG Energy Inc. reports that it has partnered with GE Vernova and Kiewit to boost electricity generation for GenAI demand. We have potential resistance at 597 and support around 593. Look for these levels as key indicators. So, what are the key takeaways? Watch the 593.66 to 594 range for potential support. If this level breaks, we could see further downside. On the upside, a break above 597 could signal a move towards the recent highs. Given the news regarding Trump's tariff concerns and NVIDIA's earnings digested by the market, we should be cautious in the short term, potentially leaning towards a slight bearish outlook, but cautiously, as Forex suggests any downside could be an attractive entry point for bulls. As always, manage your risk and trade responsibly. Thanks for watching Explain the Charts. Don't forget to like and subscribe for more in-depth analysis.